afternoon, everybody, and welcome to the latest in our Meet the Management podcast series. My name is Marc Ashton, and today I'm joined by Warren Wheatley, CEO of Altvest Capital. Warren, thanks very much for your time.
Hey, Mark, great to be here again.
Absolutely.
We talk often, so happy to be on the show.
Sounds good. Warren, maybe starting point before we dive into your results, 2 years of being listed on the Cape Town Stock Exchange, having to put out financial results, public scrutiny. Is it all that it's shaken up to be?
Mark, we're actually hoping for more and more scrutiny and more eyes, and that is happening more and more frequently. It's always a challenge, no matter how waxed your processes are, no matter how good you think your internal controls are. It's always difficult to deliver the results, and there's always last-minute issues or anything else. But the team rises to the challenge. What's compounded this year, and we'll be releasing in the next day or so, we've got now 2 annual reports to complete, one for Altvest Capital, and then one for our investment subsidiary, the Altvest Capital Opportunities Fund. So we doubled the challenge, but also doubled the opportunity for shareholders. So that remains difficult. From an CTSE perspective, there are pros, so we get the exposure, we get the limelight, we get everything else. The team there is incredibly helpful. They help us comply, they help us stay in our lane. And the regulations are what they say on the tin, so to say. So for a small company figuring out or finding their way in the capital markets, it's the perfect destination. The one issue we have is that the broker network hasn't developed quite as quick as I would have hoped, and so liquidity remains an issue, and access to retail investors remains an issue. Institutions are able to access it, but retail investors still struggle. So that's that.
Maybe one of the questions I think that's sitting on everybody's lips at the moment, particularly looking at the most recently released set of results, is what actually is Altvest Capital? Originally you came to the market with the intent of giving access to investment opportunities that would typically be outside of the ambit of traditional retail investors, almost a bit of a holding company type vibe. And now if you look at the results, a lot of the performance has been driven by the Credit Opportunities Fund. So, are you a holding company or are you an SME lender? Where do you kind of see yourself playing?
So the ethos and philosophy has remained exactly the same. However, it has been enhanced. So the way I look at Altvest Capital as a platform is that it's a platform that SMEs can approach for funding. Now, that funding can be accessed through either an equity product, in which case you would go into the stream alongside Bambanani, Umaganu and ACOF. And those we're going to start ramping up as soon as we've solved this access to broker network issue. We actually need the depth of market to make that a successful business. And there are plans in place to deal with that. Alternatively, if the equity product is not suitable, and it's not suitable for every SME, it's a very particular SME that is ripe for that equity listing. If you still need funding, however, you may want to try our debt product, which is then delivered through ACOF. In all instances, the public are able to participate in those funding opportunities, either through equity or through funding or by accessing the debt or private credit fund, as it were.
I think having been listed for 2 years, I think you are one of I think we said it last time, you guys punch above your weight in terms of the media scrutiny that's been, people have followed your story, taken an interest in it. There's been pros, there's been cons, etc. But looking at it in terms of your revenue profile coming through this year, I mean, it's very noticeable that your results are boosted by the fair value adjustment for ACOF. So maybe a first question is that how you interpret, is that going to be your revenue profile going forward? And then follow up is, what do you think the revenue profile for Altvest Capital looks like 24 months down the line?
Right. So our revenue profile is always going to contain a significant fair value attribution. That's just a function of the fact that we are effectively a private equity fund, and fair value gains and losses will be a component of our returns always. The market, of course, is very skeptical of those if it isn't backed with realizable profits. So the challenge for us this year is to increase the cash revenue of the business, and those will be earned through two primary streams. The first is assets under management, driven largely by ACOF, but other similar type initiatives we look to list in the next few months, but also from the capital raises on the equity side of the business, or the equity franchise, where we are going to significantly ramp up the speed at which that happens. Now, the first thing your listeners will say is that Warren has said that every single year since listing. We have experienced challenges with regards to the frequency and the ability to list those. And that's driven primarily at the lack of depth and liquidity and access to retail investors within our current environment. And if we could get access to platforms like Easy Equities, as an example, where they've got 2 million active investors, as an example, or other large brokerages, that problem would be solved overnight. So we work furiously to get access to those kinds of databases. That will make the retail and equity franchise a vertical that is worth investing in almost overnight. Yeah.
We're recording this 24 hours before the start of the 2024 elections. It does feel like there's a sense of optimism in the air at the moment. It's easy when somebody's looking at an entrepreneur and telling them everything that's gone wrong. Maybe just tell us what you think's actually gone right this year.
Well, from our perspective, we've been able to fund over, I think the exact number as at 30 April is over 13 SMEs. We've created in excess of 140 jobs, saved or staved off retrenchment of 180 jobs. So from that perspective, we have found that the economy, notwithstanding all the challenges, marches on. Entrepreneurs are marching on and are looking to, increase the hustle. So from that perspective, we still require capital for the fund. At any point in time, if I look at our pipeline, we've got 2.5 times demand versus what we have ready to supply. So from that perspective, the market is hungry for capital, and we're hungry to provide it. So that just means I'm consistently on the road, begging for capital for the fund and imploring investors to take a shot with us.
Talking about ACOF or Altvest Capital Opportunities Fund, I mean, one of the things that was quite interesting, I just picked it up in the footnotes, is the nature of the investors and institutions that are putting some money behind that, primarily coming out of the automotive sector. Were these pre-existing relationships, and what is the response when you take the ACOF value proposition to the market?
So to answer the first question, no, they were not existing relationships. They were the result of a excruciating due diligence with the advisory firm that looks after those retirement funds. And ultimately, I think after probably about 9 months of deep interrogation, we were awarded a mandate, which we are very pleased and honored to have. We are presenting to a large number of institutional clients, and the response is always favorable. However, when you talk to institutions, two things come up. One is track record. And so for a private credit fund, they're looking at a track record of 3 years or more. And the other is what type of impact we're able to deliver. Now, until we've actually got some runs on the board, we can't have those discussions. But after 3 months of hard slogging, meaningful deployment, we are able to start re-engaging. We've published an impact report which sets out some of the beautiful stories, success stories. We've had almost no defaults except for one very small client, less than 1% of the portfolio, and they are looking to resolve that position. So after 5 months of operations, we fully deployed our first mandate. The book is performing, it's up to date, and it's revenue generated. And so we're going to start very shortly our next round of capital roadshows. We spent some time in London recently with the BizNews team and spoke to a number of institutions that's in that side of the pond, who are very interested about, in the first instance, coalescing and coordinating investment from ex-South Africans or patriots who are still living in London to coordinate capital deployment back into South Africa. So we were speaking to a number of financial advisory businesses who have large South African client bases. But also, we are still a bit small for some of the large UK investors who, when you do conversions into pounds, it's almost not worth getting out of bed. So that's one of the other problems, is that I can't yet approach really big international institutions because the numbers just don't make sense for them yet.
And then last question from my side. I mean, looking at the footnotes there in your report, I mean, you do talk about doing another capital raise this year between 5 and 13 million. It looks like you're underwriting that to 2.5 million of that. I mean, I think one of the obvious questions, is it a case that you're just burning capital too quickly, or can you actually turn that into a growth asset?
Mark, so one of the issues, I mean, our burn rate is not low. I won't fool anyone with that, and that's because we've got to employ 12 investment professionals to manage the fund, and it's not a position you can grow into when you're looking for investors. You actually need to have the right team in place from day one, and so it takes a while for your revenue to break even with your costs, but we're looking to get to that position around about September. The cash boost or the equity is just to buy us some breathing space, and so that is the intention. We do have quite a significant burn rate, but categorically, all indications are that we'll be break even before the end of our next calendar year, our next financial year. And once we've reached break even, the economies of the fund are such that profits will be very exponentially driven from that point forward.
Last question, and really, any final closing message to your shareholders or potential shareholders?
We look forward to your continued support. We look forward to welcoming new investors. We hope you guys enjoy reading the annual report. You'll notice that each year there's a metaphor attached. This year's metaphor is building the nation. And that's clear from both the Lego motif and the slogan on the front cover. So we invite investors to contribute to the fund. We're highly impactful. We're looking to create jobs, and we need South African capital to support us in that endeavor.
Warren, thanks for your time.
Great, Mark. Thanks always for your support.